I mean, I have a Fintech founder on the podcast, and so I can't resist asking, I would love to know an insider's perspective on whatever is happening with this whole RBI and Paytm saga.
This is one of the things which I believed a lot is don't try to squeeze a product into the market, build a product what the market asks for. So that is where I see that when you work in a gray area, right, you have sleepless nights. Like tomorrow, like you have a team dependent on you. You have one of the things which you need to accept as a founder is you can't do everything by yourself, period. The entire NRI category. Recently we were speaking with a lot of NRIs and we were shocked to see that they are absolutely clueless with their money.
Hello and welcome to another episode of the Startup Operator podcast. I'm Roshan Karyappa. Now, a lot has happened in the fintech sector. We've seen the whole Paytm Vs RBI saga unfold before us, and we are really privileged today to have an insider's perspective on the podcast. My guest today is Manish, who's the co-founder of Fello, which is an app that is gamifying savings and investments. They have about 1.5 million users. They're about 3 years into their journey right now, and I speak to Manish about how to balance growth and compliance in the background of everything that's happened, how he's managing regulators, other stakeholders that are critical to their business, and some of the levers he is sort of exercising on the branding and distribution front, his YC experience, and other learnings from his journey. This was a fascinating conversation. Manish is an extremely interesting guy. He's been with Koinex, Flobiz earlier, kind of an old hand at startups, I would say. And a lot of insights here that you could learn from. So, yeah, stay tuned. Hey Manish, welcome to the Startup Operator podcast. Thank you so much for making the time.
Thanks a lot for inviting me as well, Roshan. Really happy to be here and
Awesome.
Exchange conversation with you.
Yeah, so I really want to learn more about your journey and what you're building at Fello and everything. But before that, right, I mean, I have a fintech founder on the podcast, and so I can't resist asking, I would love to know an insider's perspective on whatever is happening with this whole RBI and Paytm saga, right? How do you see it?
Get it. So firstly, even before, digging deep into what went wrong with Paytm, I guess first, for every fintech founder, Paytm has been one of those companies
Absolutely.
which you
OG.
were always looking up to. Like, if you go out in the market, like if my dad knows about fintech, unko pehle Paytm. Like, Paytm is the first company which they know about it. So they've achieved a bigger milestones. But what happened right now is one of the things which everyone needs to know is Paytm has two different entities. One is you have your One Communications OCL, and then you have the payment banks, Paytm Payment Banks. The issue started at Paytm Payments Bank, and Paytm Payments Bank have different regulations. Like, it is not a bank where the money saved in these banks can be lent out to people. It can be only used for deposit purposes. And there are some stringent guidelines, like your deposit limit can't exceed over 1 lakh, 2 lakh rupees. And if you're non-KYC verified user, your deposits cannot cross 10,000 rupees. So at a very root level, there were 3 biggest red flags which have been reported as a part of due diligences. And the first challenge was the transaction volumes were significantly higher than what was supposed to be there. That was the first problem statement which they saw. Like, if the limit was 1 lakh, 2 lakh, there have been few cases where the transaction volume was significantly higher or the deposit volume was significantly higher. The second one, which caused biggest alarm, was in terms of KYC verifications, erratic KYC verifications happening. That was also found out as a part of this. And the third one, which was the biggest red flag, was one PAN number can have only one account on Paytm. There were few situations which have seen that one PAN number had more than
multiple accounts.
Exactly. Now, once RBI found these things out, that is where they came and say that, hey, you need to shut your payments bank shop And under payments bank, there are other products also. You have your fast tags, you have your wallet top-ups, etc. And these all services were potentially shut down. And this is everything under payments bank limited. OCL, which is one communication, which is the Paytm, and payments Paytm bank are two separate entities. But for a retail consumer, they don't know about all these things. But Paytm, one communication limited, owns 49% of payments, Paytm Payments Bank. So that is where, when they saw that there's such a close relation, that is where everyone has this misconception right now that Paytm might also take a hit. They are of this preconceived notion that I won't be able to do my QR scanning, make payments, etc. But it's only the deposit services which are going to be halted. We don't know what's going to happen. March 15th is the deadline for it. But in the coming days, Paytm has huge B2B audience. Like there are days even we use Paytm as a payment gateway services. There are a lot of, you have your voice machine boxes which you're seeing every day where Kirana store guys are using. So those still run, but the deposit services on your fast tags, wallets and all will be potentially halted. So they're figuring out, they're trying to see what will happen. It is very big. We need to accept that thing as well. And need to see how exactly a concrete solution will come up, because there are very few payment bank players in India, and Paytm has been the biggest one. There was Airtel Payments Bank as well, but Paytm Payments Bank, everyone have been using it. So that's been the situation.
Yeah. No, it's certainly a watershed movement, I will say, right? I mean, so, all of us are, of course, rooting for Vijay Shekhar Sharma. I mean, he's had a 20+ year journey.
Exactly.
And, it would be a really tragic end to sort of like, end with this.
Exactly.
Right? But at the same time, right, I mean, what boggles my mind is that, look, I mean, you're a bank, right? And you've been warned like multiple times, 4, 5, 6 times. Right, and I would assume that you've hired some pretty senior people from the industry to run this, right? It's not like a bunch of kids who are like sort of handling all of this stuff. So I'm just wondering, how did it get to this, right? I mean, is it a matter of scale? Is it a matter of, just perhaps being lax on some things? I don't know. I would love to be a fly on the wall in one of these meetings and figure, what really is the cause.
I guess let's talk more. Keeping the corporate level aside, even if we think from a human level as well, say that the company is becoming super big. The founders have reached a point where they're completely into, strategic initiatives, taking the business ahead, and the ownerships are given to other potential leads. And there are some concrete targets which potentially have to be met. And that is where few deviances from norms start kicking in, and we have seen it across some of the best companies or the biggest companies as well. So me being the third eye and just seeing it from outside, that is one of the things which I'm guessing might have happened, where at the lower end of the funnel, where a lot of people were responsible for few actions in anticipation of hitting some North Star goals, some deviations might have been kicked in. But again, a couple of things is Paytm is one of those companies which has some of the best licenses possible as well. Due diligence is something which they have been doing concretely, but they have missed out on multiple occasions as well. So what this has been is a classic case of almost like one person defaulting, someone else seeing it and defaulting, and eventually it became too big to be handled.
It's a house of cards.
Exactly. That is what even I'm guessing. But again, it's happening with the payments back ecosystem. Need to see how exactly the Paytm ecosystem, which most of us use on day-to-day basis, I'm hoping that they're on a kinder note or on a safer note. But again, that is the biggest hunch what at least I'm having from a third eye perspective.
Right. And I know things will not be the same going forward, right? I mean, I'm sure that it'll have a broader impact on the ecosystem and so on and so forth. What do you see happening? I mean, how do you think this will impact, every other fintech like yourself, perhaps operating in this ecosystem?
I guess it wasn't just the Paytm thing which has startled all the fintech operators or financial services operators. I guess this started coming in, like we're talking early stages of pre-pandemic and post-pandemic. Like once the fintech wave just came in, you saw the wave kicking in much more like post-pandemic, and everyone have been adapting to financial services way more than before. Like the first wave of financial services started with, demonetization in 2016. That is where digitization of banking started going big time. Back in those days, penetration happened at such an erratic way that regulations weren't that stern. Like even RBI and SEBI were kind of clueless what's happening. There's a huge wave which is good, but again, then they noticed that the players who are operating this ecosystem are slightly deviating from healthy norms. Yeah. So that is where RBI and SEBI, since I feel that 2018 itself, they started coming and imposing some stringent guidelines. But for us, I feel that the first instance when I saw that it startled us was when the prepaid instrument ban, or like giving credit on prepaid cards, was halted. That is where I saw the biggest shake coming up, because there's so many startups back then who are building business models on giving lending on prepaid cards. For example, there was Slice. I knew there was every fintech was trying to come up with.
We had Uni on the podcast as well.
Exactly.
Right? And again, someone who's a really experienced founder, right? I mean,
exactly. I guess that is the first time they saw that, okay, like RBI and SEBI are watching very, very closely. You're thinking that, they're just not watching, but once they're seeing it, they're coming up with best practices, in fact, which is going to help us out in stopping from doing such sort of things. And operators will be much more averse that you just can't mess around with these people. So how exactly, at least I'm personally seeing, is it's a huge green flag, in all honesty, for the reason being that we are getting to know what to do and what not to do. Secondly, it's also giving, especially someone who's like 3-4 years into this business, it is giving us a very clear indicator of the best practices, what we have to follow. Because once the company is growing big and such a big company is facing such sort of challenges, it's giving us those nudges to follow such healthy practices so that those things don't come up in the long run as well. So that is how I'm seeing as a positive sign. And rather than taking it as something on a negative note, that is where, since being in this fintech ecosystem for the last 7-8 years, I feel that this is a wake-up call for all the fintech operators and founders that, hey, like, be wary, make sure that your entire team, and even like right from your customer success team member to as big as head of engineering, marketing, everyone are abiding few norms. So that is how I see this as a wake-up call for everyone.
Yeah, no, very well put. I, I sympathize with the regulators as well, right? I mean, because look, the whole demonetization wave was so massive,
big time,
right? I mean, I think they played catch up after that for a whole couple of years at least after that, right? And it was, I mean, it had so many positive spin-offs, whether it is like, formalization of the economy or, payments becoming like almost near zero in terms of cost of payments. And then again, I mean, being equipped to deal with COVID, right? I mean, because imagine, I mean, we didn't have a UPI, or imagine we didn't have that sort of a robust payment ecosystem during that time, right? So yeah, I mean, they've had to play catch up for a long time. I think
they were seeing, they were just being a silent observer, but noticing everything as to what all was happening. Like, just because the king is silent, it doesn't mean that he or she is not, a king or queen is silent, they're not observing things. They're just noting down things, and once they came up with full force. But I'm seeing it in a very healthy way. Like, trust me, like, having no regulations is worse than having regulation, because you're at least having a ray of hope to, I mean, which ray of hope to follow. And that is where they're coming up with healthy guy. And one of the things what I also realized is, see, we're talking about like a 1.3 billion populated country, and majority of the adapters of fintech ecosystem are the people who are not into the digital ecosystem. Like, India is one of those countries where at least 2017, 2018, we're talking about like less than 30% of the people into digital ecosystem of payments. And suddenly we are the largest, users of digital payments. We are growing at a tremendous rate while we are sitting right now. When such sort of adaptation is coming, especially in a country like India, fraud also comes along with it, especially financial fraud comes along with it. SEBI and RBI is not concerned about the wealthy. When I say not concerned, I'm literally not saying that they don't care. Their biggest interest is in to sort of safeguard the retail consumers who are almost like 98% of the Indians right now are consuming, digital financial services. And these are the people who are falling to such sort of fraudulent activities or like scams which you're seeing very recently. For example, when UPI became such big thing, UPI scams were everywhere.
Yeah.
There were Paytm scams, there were PhonePe scams, and people are sharing fraudulent QR codes saying that mujhe payment kar do. People are just illiterate about how to consume these services. Now that is where RBI and SEBI has come up and said that, hey, like, these are the best practices. Let's follow these. Let's not follow these. While these are happening, we also want to be vigilant. We want all the data coming up. So that is how I'm seeing that since 2018, there has been tremendous growth in regulations. Of course, sometimes it feels that, RBI and SEBI is trying to catch hold of you or trying to squeeze things for you. But at the end of the day, they're trying to do for the better good of the entire industry. It might be, a slight road bump for a very short period of time, but in the long run, we see a very, very healthy roadmap. That is what I'm seeing at least.
Yeah, so we've had plenty of fintech founders on the podcast, right? And one thing is unanimous among all of them is that obviously nobody would like to operate in ambiguity, right?
Exactly.
I mean, nobody likes to operate in this gray area where, there is scope for some kind of a regulation that can totally turn your business on its head, right? Nobody wants that, right? Everyone wants the regulator or the policymakers to clarify what is right, what is wrong, what is the spirit of the law as such, right? So that they're very clear on what is the overview in which they need to operate, right? I mean, so yeah, I mean, there is a thought that, startups sort of take advantage of loopholes and stuff like that. But believe me, that's like building like a very profitable McDonald's on an active volcano.
Exactly. Right? I feel that startups or, aspirational founders try to take the best out of the opportunity which is lying over there. But eventually down the lane, they see that, how white or black is it or how gray is it? Like when you're telling the example of, operating in a gray ecosystem, it falls back. It reminds me of the days at Koinex. Like
crypto, exactly.
Yeah, right? When we were the first crypto exchange back then, we were doing trading volumes of over $200 million, largest exchange in India. Every day over 25,000 sign-ups coming. $200 million. Exactly. That's our trading volumes back then. And one day, I still remember this day. So it was first week of April 2018. And I was traveling from Mumbai, Andheri I was coming to my office in Lower Parel. That is where Mr. Jaitley, he was announcing, the ring fencing on the crypto ecosystem.
Right.
Before starting, the crypto markets were at least not on green, but there were positives. As soon as I came to the office, everything went like minus 15. And I asked, like, what happened? They were like, it's a ring fence situation. No bank is allowed to partner with us.
Yeah.
And for the next 7 months, we're just operating in a gray area. We don't know, should we continue with Koinex or should we do something else? Yeah. Thankfully, like, we took the very cautious call of coming into regulated business. We built Flobiz later that, and right now Flobiz raised like $50 million, doing amazingly well. So that is where I see that when you work in a gray area, right, you have sleepless nights. Like tomorrow, like you have a team dependent on you. You have like 5 lakh customers dependent on you.
Yeah.
How exactly you need to handle this, that keeps you in a spot. So one of the things which I always tell, so when I speak at my incubator, Entrepreneur First, when they invite me for talk, the first thing what I say is, look into regulations. Know your regulations. If you're running a fintech company, if you are not malleable enough to fine tune with the regulations, don't build a fintech company. The opportunity is great, but the only thing is, you never know what new regulation might come in, and you need to be fast enough to sort of adjust to that regulation, make your consumers be adjusted to that regulation as well. So that is one of the biggest things what I see as the biggest character a fintech founder should have. And I'm seeing, every VC right now, they're looking the same thing for fintech founders. Like, are they ready to adjust towards stringent regulations where, if SEBI and RBI comes. One best example what I have is Slice, man. Like, when the PPI, ban was imposed, when I say ban, like, you can't give credit on PPI, Slice by that point of time raised phenomenal capital. And one of the smartest thing what I feel they did was, they went and, got a primary stake in a bank.
Yeah, bought a bank, right?
That's phenomenal. Like, that's the ballsy move, in fact. Need to appreciate the founder's mindset. Like, I don't have prepaid instruments, so what? I'll just acquire a stake in a cooperative bank. Amazing strategy. So that is how founders need to think if they're in a fintech company.
No, it's hard from all of these aspects, right? And I feel like, the founders and the industry at large has to be a lot more proactive to help the policymakers also understand, what are the opportunities, and so on, right? Because fintech is one thing. I mean, think about AI, for example, right? I mean, who knows how to regulate this beast, right? I mean, it's changing so fast, and it's changing, and it's impacting so massively, right? I mean, we've all seen the Sora videos.
Phenomenal videos.
Right? I mean, where do you even start with policy, right? On something like that.
Exactly.
So policy is always playing catch up, and the best ways, the industry can sort of help itself is by being proactive on this front and working with the regulators and policymakers, right?
I guess they both need to work hand in hand, like,
for sure.
See, penetration of new technology is growing at a massive pace. Like, previously they used to say that generational gap is 30 years. Right now it came to 10 years, and this generational gap will squeeze down more. With every generation, penetration of new ideas and technologies equally going at a faster pace. Now, when we're talking about that, regulators can take healthy steps only if people playing in this ecosystem are equally vocal and contributing towards it. It's like, you just can't clap with one hand, right? So that is how they need to work together. And that is where I see, not just with respect to AI or fintech, also every other ecosystem penetrating in a very good. I'm very bullish about space tech, in all honesty.
Yeah.
And one of the things I feel that, like there also, if huge disruption comes in, I guess it's only people who are knowing ground level problems, they will only be able to sort of vocalize it.
But see, there, right? I mean, you have to give props to again, ISRO, Indian Space Association, and so on, right? I mean, they've really they've had a very innovation first approach in that sense, right? I mean, it'll take maybe a NASSCOM equivalent in the fintech world to sort of like do to fintech what NASSCOM did for software services, right? I mean, I think the fundamental dichotomy I see, right, in operating in fintech, right, in 2024 is this balance between growth, right, and compliance. The mindset of move fast versus also cover your bases, right? And you've operated for the last 3 or 4 years, right? What are some things that you've learned? What are those checks and balances that founders should sort of build in their business to not get into trouble with the regulators?
I guess I was extremely lucky to have the opportunity of working in a fintech company before this, which was kind of in a gray area, like the crypto ecosystem. There, on one hand, we're just growing, like growing without
to the moon.
Exactly, literally to the moon, to be honest. And then suddenly regulations came in, and which of course we are very mindful of it, but again, growth was only thing which we sort of went about. Then when we pivoted from Koinex to Flobiz, that is where I understood how exactly you have to have a fine line of balance between your growth and how to also make sure to have a very sound check on compliance. What I did when I started Fello or ideated on Fello back in like 2021, 2022 was the first thing, you have an idea, spend some money, get a legal, or just jugaad market, just go to a legal person and get checked with the regulatory angle of it. That's a very basic sanity check first you need to do before building any fintech company, because you never know how it is going to happen. Once that is done, I candidly went and asked the key players in the ecosystem also, like, what are some of the things which I need to be ready about? Like, for example, started building the company. After 1 year, what are the potential challenges which I'll be facing in this thing? So that is where I was wary about that at this stage of the company and this stage of the company, these are the potential challenges which will come, both from consumer perspective and even from regulatory perspective. And that always runs on my mind. Like right now, while you're speaking also, I know that once we achieve our next 5 million users, what all new things would be coming up. Taking that into consideration, you have your growth roadmap, how steadily the growth needs to be. For example, think of a situation that, say, we raised like $4 million, $5 million. If I just spend that money erratically, I could have got my consumer users very highly. But suddenly, if a new regulation is coming up, like what happened with Slice, etc., you also need to be ready to handle that in a very, very healthy way as well. So that is where what exactly we have as a strategy right now is grow at like a 15 to 25% month on month, very steady growth, grow your user base, grow your asset under management. While that is happening, keep building healthy practices to your product. New user base came up. What are the new challenges which came up? Like, for example, when we had like only around 100,000 consumers, Google did not give a damn about us. Once our user base became like 500,000, Google started doing very, very high quality checks on us. We did not know about all these things. So that is where, when we have our next round of catch-ups with Google or like regulators, we ask like, hey, what is the next biggest challenge coming up?
So on that point, right? I mean, do you also have these catch-ups like periodically, like
very periodically, very, very periodically. For example, right now we are speaking, today we actually had a catch up with the Google team because we are ideating on a new product or new feature within the application. And and Play Store is one of your biggest go-to-market as well. And it gives you a lot of visibility. And we asked them like, what are the potential challenges we being a fintech company might come up? For example, because, one day, there were days when Play Store has removed a lot of fintech applications, fraudulent loan applications. But we always want to make sure that we are always having those check marks ticked off even before us submitting our application to Play Store. So we have these catch-ups very, very periodically. We also have these catch-ups with our banking partners, payment gateway partners. For example, we are right now ideating on an NRI version of Fello. When you're trying to go about it, first we start having a catch-ups with banks. We say that, hey, this is what we are doing and what are some of the things which you need to be aware of, not just from an operational challenge perspective, but also in terms of regulatory perspective. Are you sensing any new regulations coming up? If say we're offering gold P2P mutual funds, how exactly do you see the current ecosystem being and what were the challenges? And we be super wary about it. For example, last year, there were few regulations with respect to foreign remittances. So that is something which gave us a wake-up call when we were initially ideating. During the early days of ideating, only this, foreign remittances, limitations, etc. came up. So like that, we start asking banks and people within the ecosystem that, are there any other things coming up? So that is how some of the best investors on a cap table, they also give us some inputs that, hey, you're ideating on this, right? So be aware. These are the other things which are going to come up as well.
I would say also, right? I mean, platforms like Google, let's say Azure, for example, etc. These are also great proxies for compliance.
Exactly.
Right?
Exactly.
I mean, you meet, a Google compliance
undoubtedly
norm, right?
Yes.
By extension, you meet, the other compliance norms that required as well, right?
Couldn't agree with you more on this one. Like the level of information what they're having over an application is like way more granular, pristine. So of course, if someone wants to sort of vet or review, I guess Google Azure could be some of the best people who could just give some candid information about the products. Yeah.
Right. Awesome. All right, we've spoken about enough doom and gloom, right? I'm sure there's a lot of good things going on in fintech.
Oh, as well. Amazing things are going on in fintech.
Right. So as things stand right now, what are some massive opportunities in fintech that are, that remain unsolved?
I guess I'll talk this on two or like three brackets. First, I want to talk about, since we're part of YC just announced like 22 to 23 areas which every founder needs to look into. And there are only two fintech things in that. And first one was stablecoin finance. And what I mean by stablecoin finance is digital assets or crypto assets which are backed by real world assets and entire financial economy around it. That is the first one they are bullish about. And second one, what they are bullish about is the insurance ecosystem and removal of middlemen in the entire healthcare and insurance. This is Y Combinator's belief. But me operating in the ecosystem, some of the areas which everyone is mostly bullish about is the entire NRI category. Recently, we were speaking with a lot of NRIs and we were shocked to see that they are absolutely clueless with their money. Only very small chunk of users know how to save and invest.
I have a theory about this. Okay, see, the thing is that they left India 10 years back when the only form of real estate, when the only form of investment they knew was real estate and FD.
Exactly.
Right? So, they may invest in stock market there in the US. They may.
Yeah.
Right? But then they don't
You're
have an
actually
idea.
right, they may, like, it's a very small person they're doing it as well.
They may.
Yeah.
But really their idea of India has changed.
Huge, highly changed.
And so, how do you sort of get context about whatever's happening here, right?
Yes.
And the two, this is not a pure intellectual exercise. There's money to lose.
Exactly.
So, sorry. I just thought that was an addition.
You're absolutely spot on. When we were speaking with these people, firstly, they told that we know about US stock market, but we just know the Teslas, your Facebooks. They don't know others. Because it's a very different ecosystem demography when compared to India. So one common thing what we heard about these NRIs was we asked, how do you invest? They tell ki we're calling up our chacha, mama, or my dad, or my mom, everyone. I'll just bata do kaun se land mein paise dalna hai, and there I'm just transferring the money. Apart from this, they're not doing anything. Would you believe that last 2 years, Indians did not know how to invest a lot, and they ended up investing a lot into Texas real estate. And Texas real estate just boomed up. Right. Because Indian real estate was skyrocketing, which became out of the affordability zone of even some of the NRIs. So that is why they invested in Texas real estate. So they're just clueless about their money. So in the last 2 years, a lot of neobanks for NRIs came up, NRI-centric investment product. That is one field which I see disrupting very, very well. Second thing, I'm very one of the industry which is booming significantly post-pandemic is the entire insurance ecosystem. Like people became much more wary about insurance because when pandemic came up, people were not ready for such huge medical expenses. Like a lot of people just lost their savings. So that is where insurance saw a huge uptick. But again, that uptick is slightly flattening out. But it'll grow significantly. People are becoming much more wary about insurance. That is where I see micro insurance as a category growing very well.
So I think, auto insurance is anyway mandatory, right? And employer insurance is, it is what it is.
So you don't,
you don't do anything about it.
Yes.
I think COVID was an inflection point.
That's what I was talking about,
I saw my peers and friends, right? Even folks who were like miles away from any insurance product, buy that Kavach, right?
Exactly, yeah.
Right? With a Max Life or whatever else, right?
I got every insurance company calling me saying, "Bhai, Kavach le lijiye. Your current thing is not covered."
So I think that was an inflection
big time. Yeah. And it was just like, they made it affordable also. And that is where I saw that, consumers have started feeling that, insurance is something which is very, very important, health insurance and life insurance. So that is one field which I see. These are like what industry is speaking about. Of course, banking as a SaaS has grown very big time. Some of the best companies like Decentro, payment, they recently acquired a payment aggregator license as well. So payment aggregator space is something which I'm super bullish about. But keeping these two things aside, I come from a solid trading background. So the only thing which I'm super bullish about in the coming days is the entire stock market ecosystem potential for disruption. Like last year speaks volumes for it. You saw Grow onboarding lot of investors, trading volumes on Zirada going out of charts. This is only happening because people started realizing that your banks are not going to give the same money. You need to start getting into capital markets or like investing in a very healthy way. Huge upsurge. And right now, if you see the numbers, less than 10% of Indians have equity accounts.
So we've been tracking this on the roundup that we do. And, 3 years back, we said that, 1-2% of India invests. And that number has slowly grown from 1-2% to, somewhere 4-5%.
Exactly.
And perhaps, it'll grow, right? Single digits, but it's grown, right? 4-5x at least.
Exactly.
So that's a very promising sort of a trend, right?
Huge. Yeah. In fact, like the number of investors Grow onboarded was it speaks volumes for
and
it.
And so many first-time investors.
So many first-time. We're talking about penetration into tier 2, tier 3 cities,
right.
And mutual funds are being the first touch point for these people to get into, and then they're getting into stocks as well.
Yeah.
Like, you believe or not, like when we speak with our consumers, when you do consumer market interviews, people who are never invested, like let's talk about that category. The first thing we ask, like, what are the assets, like how exactly do you want to save and invest in life? First thing, involuntarily, they say mutual funds. And we asked them why. We asked actually in tier 2, tier 3 cities also. We are shocked to see the result that people are talking about the mutual fund Sahiya campaign.
Yeah.
And they told us only because their beloved actor or like a cricketer is coming and speaking, the trust factor went in.
Right.
It played huge pivotal point in penetration of mutual
props
funds.
Props to the mutual fund industry also, right?
Yes.
I mean, they've been evangelizing it for years.
Yeah.
Right. And finally, we're starting to see that sort of asset base grow also.
You should actually see the data. Like, you see the total asset under management in US mutual funds versus Indian mutual funds. They're like almost 100-fold of how much they invest. So when you're talking about like a 1.3 billion populated country, it's massively up for disruption. Yeah. So I'm sensing that in the long run, Zerodha's growth of India will have, of course, this angel broking and all these upstarts. There'll be more players coming into this ecosystem, and that is my personal, interest or inclination or hypothesis that it'll go.
Yeah. No, I think they've been the shining light in the whole fintech ecosystem, right?
Yes.
I mean, the Zerodhas, the Grows, the Upstocks. Because, I mean, if you look at the whole broking industry, right? I mean, the top 4 or top 5 look very different today.
Exactly.
It's not the HDFC or ICICI Securities and so on, right? I mean, it's all the fintechs.
Yes.
Yeah. So, we've given enough context in terms of what the consumer is and so on, right? Let's talk about Fello. Finally, right? 30 minutes into the podcast.
No, I just love talking about startups. Like I'm a big time. I've been just growing. My first internship was in a startup.
Right.
The name of this company was Zipper, and what they were trying to do is they were trying to make QR codes for your addresses. For example, no one remembers your address. They made a 8-digit alphanumeric code for your address. My address back then was money 1166. So you just plug it and you get off your address. Eventually, the government of Telangana partnered with them. They did. So that is how my inclination towards startup came in. Right. And I've been just talking about startups. So even when you started the conversation about startups, I was just, inclined towards that thing.
Awesome. So, Awesome. Yeah, but let's talk about Fello,
Yes.
Can you take us through the founding of Fello? How did you go from idea to product to company?
Yes, absolutely. So, after Koinex, I was Flobiz. After Flobiz, I took a break. I was just doing a lot of consumer interviews, and my first idea was actually in agri-tech space. Then I realized I don't have the skill set of solving an agri-tech problem, though it was very good. Then I went back to my drawing board and realized that when you were speaking with consumers at Koinex and Flobiz, there were a few potential problem statements which you knew. Let's start from there. So started speaking, and I found out that saving and investing as a category is something which is, you told the numbers, back then it is like nothing. And that is how the idea started. And then I happened to get into this talent investor program called Entrepreneur First. What Entrepreneur First does is it is a co-founder matching platform, or an incubator also, you could say, where they help you build your company, help you in ideation, and if they love your idea, they also go ahead and put a pre-seed check in it. So that at Entrepreneur First, that is where started ideating, speaking with consumers across different age groups, and found out that people want to save and invest, but they don't have the motivation to save and invest. And only 6 to 7% of the people with whom we're speaking were seasoned investors or savers. Rest of them are not saving. And we're talking about an age group of 21 to 25. Back then, we started off with this age group. Now, then we thought of building a robo-advisory application for them. But back then in 2021-22, all robo-advisory applications were getting acquired. And they weren't building a business. So me as an individual had this belief that, let's build a scalable business. Let's not build a business.
Generally, people do something different, right? I mean, it's like if businesses are getting acquired, they'll build another one very quickly, right?
We'd love to. But again, I guess it's just about the Koinex experience. Again, I guess I speak a lot about that thing when you're seeing within 2 years, you build such a big business along with the co-founders. That is what I was hoping to build and aiming to build right now as well. So then we thought, let's take one step back, and we started speaking with consumers. We asked a very simple question, like from morning 6 o'clock to to the time you sleep, what do you do? And there we found 3 points. First thing, they told that they use Google Pay and Phone Pay, and they got into digital mode of transaction only because Google Pay incentivized them. And second, they told that people who invested told that they invest only because of the friends and family. And third biggest point which we found out that these people were excited towards all those applications which have a gaming element to it. And some sort of gamification element. So that is how we got this idea that why don't we sort of build a gamified experience over a traditional banking ecosystem and try to bring people into healthy savings behavior with subtle rewarding experience. And that is how the idea of Fello came up. And when we got this idea, we thought, why no one is doing it? And we saw that actually scared us, but also it gave us an excitement factor. Scared because why no one is doing, is something wrong. Then we got the regulatory check done, as I told you. Legal team told that everything is fine. Then we saw the Western markets. Like someone must have done it. And that is where we saw that this is actually a very big concept in US, UK, Africa, UAE markets. It's called price-linked savings. Like a price linked to your savings. And once we saw that, okay, someone has done it and they're just scaling it. There are a couple of YC-funded companies who are actually scaling it. That's how in 2021, for the first time, the ideation was done. Idea is good, but right now you have to validate it at a decent level. So we built a POC. I got a license. My tech team built a mini version of the application as soon as possible. And for 2 months, we ran a proof of concept of it. And in the proof of concept, we acquired roughly around 5,000 users. In this 5,000 users, we got 70% of the users investing. And of the 70% of the users, 80% of the people were reinvesting on the platform.
Nice.
We acquired, of these 5,000 people, we acquired 90% of the people through organic referrals, and we're talking about third, fourth, fifth degree referrals.
Wow.
So using this data, we went and raised our first round of funding. Entrepreneur first put the capital. Now, after that, we had to validate this idea at a larger scale. And that is where, with the $1 million what we raised, we started scaling it up. And we got easily around 300,000 users within a short span of 5 to 6 months. That was the MVP stage, most viable product, minimum viable product stage of the company. That is where we got into Y Combinator, and they also nudged us in the right direction as to what are the North Star goals which you actually need to attract. And once we were actually growing at a point of 35% month on month. And once we saw that, we were able to pitch that steady growth, that is where our pre-Series A investment came in, where we raised $4 million. Now, where exactly we are is, we have some North Star goals of attracting more AUMs with bigger user base and start meeting some revenue targets what we have. So after that, we'll potentially go for a Series A, Series B. And after that, we want to be a self-sustaining business. That is what we want. So that's how the journey of an idea came to the level where we are. And during this journey, we were fortunate enough to have an amazing 26-member team. So yeah, that has been that. We never overhired. Right. We absolutely never overhired. Took only whom we need. But yeah, that's been our journey.
Fantastic. I can see that you've been really deliberate about a lot of the choices that you've made, right? I mean, even starting with like what idea to sort of pursue.
Yes.
Right. It was not something that, on a whim, hey, I'm facing this problem, let me just solve it for a larger audience kind of thing. Right. Which is also something I notice a lot in founders these days. I think they're a lot more mature and sophisticated about what businesses to pick. That wasn't the case, 15 years back, right?
It's like, this is one of the things which I believed a lot is don't try to squeeze a product into the market, build a product what the market asks for. And that is where, again, trying to go back to the root basics, elementary stuff, that first find out the problem statement, try to come up with potential solutions. That's where we ruled out a robo-advisory, and then we came up with something different. And this is what even the consumers were asking. So that's how the approach has been, rather than trying to push something into the product.
Right.
And I guess one of the best things what we did, and we always do, is if we are getting an answer as a no, we act on it as soon as possible also, because you just don't want to go blindly behind a no saying ki, like, this will work one fine day. That is, you're just going behind some foolishness and stupid. You need to have that sense of maturity also to say that, oh, this is not working, like, let's put a full stop to it and let's start doing something else as well.
Interesting.
So yeah, that is how we were strong enough to discard some of our features also, which the team put entire effort into it. But again, the consumers did not like it. So that is how we always kept growing.
Yeah. And, it's an amazing marriage of sorts, right? I mean, investing or saving and gamification.
Yes.
Because, I think life itself might be a simulation, right? Right? We might all be playing might be in a game already, right? I think there's something about gaming that's so intrinsic in us, right? I mean, I'm not a gamer, right? But I have noticed simple things like, we're doing this stupid step up challenge with our team, right? And I mean, the competition is intense.
Gamification is everywhere.
I never really cared so much about steps and whatnot.
You see your Apple Watch always like people just got glued into fitness thanks to gamification.
Yeah, exactly. I mean, I'm walking around like a madman around my complex at 11 p.m.
Yeah, exactly.
in the night, right?
Oh, is it?
Yeah.
I guess we've talked the same.
11 p.m. to 12 a.m. is my window, right? So I just watch like what people are at.
Yeah.
Up until then, I've maybe clocked about 7,000 steps.
Not even trying to make this up.
Yeah.
Ring so many bells. The other day we were at Satya's. Me and my friend, like at 11:15, we had a couple of beers and he was like, "Tumhare kitne steps baki hai?" And we both are really good friends. And there was 2 other friends we had to give company to.
Right.
And hum dono baat karte the. It was like, first 15 minutes he went for a run, next 15 minutes we went for a run. Completed a 10,000. That is gamification for you at the end of. Like we were having a 7-day streak. Right. And we did not want to break that streak. It's there. Gamification is always there with us.
Trust me, there's a whole tangent that we can take that will be like half an hour rabbit hole, I'm sure. I mean, last Sunday, after a couple of drinks, I mean, I was also like, hey, I think it might be a good idea to just run, right? From Jyoti Niwas to, all the way to Gillies.
Yes, exactly.
Yeah. There's something so visceral about that.
That's. I mean, when we found that consumers were glued, and when this is a financial concept, by the way, like when we got the idea, when I told price linked savings. So though I come from a finance background, I mean I wasn't introduced to this concept, and it dates back to 1950s, by the way. So there's a bond in UK which is called premium bond. How premium bond works is you have to invest £25 into the bond. The bond lasts for 1 month.
Okay.
For every £25 you save in this premium bond, you get 1 lottery ticket. The more £25 you save, the more lottery tickets you get for 1 month duration.
That's a great concept, by the way.
What they do is it gives, say they're like the bond collected $100 million. They give an interest of 4.4% on this thing. So this $100 million accumulated 4.4% interest. We're talking about roughly $4 million.
$4 million.
Yeah. This $4 million is given out to top 10 people who win the lottery as a reward. So people, in anticipation of winning that lottery, they ended up saving for 1 month. And this bond runs even right now while we are speaking. They don't give out and the beauty of it is tax-free. Because this money is being used by the government. So that is how we notice that, okay, government khud chala raha hai. Do you know that there are banks in UAE called lottery millionaire banks?
Wow.
And what these banks do is, these are run by the nationalized bank. Like how we have SBIs over here, they have the Abu Dhabi National Bank and all. So what they have to do is, they have to have a minimum savings of 25,000 dirhams and you get something called as a lottery certificate.
Right.
Once in every quarter, they take out a lottery draw and give out a Mercedes Benz. So people in anticipation of winning that Mercedes Benz, especially blue-collar, employees in UAE save a lot into these things. On one hand, their money is safe. They're also getting an interest. They're getting 1% interest on this. On the other hand, they can win a big car. So that is how gamification has brought people into healthy banking and healthy savings. And we saw that is a problem statement. Chalo, hum bhi thoda gamify karte hain, experience bol ke we started building an app like Fello.
Nice. So what were the different levers for you in going from, let's say, 0 to 5,000 users, as you said, 5,000 to your first 100,000, and then adding few more users along the way, right? I mean, if you could just talk about those different levers that would be useful for others somewhere in that journey.
I'll talk about 2 perspectives. Like first thing, I'll strictly tell from one of the things what we see is most of the companies which are building, they raise venture capital. And what exactly VCs also look for early stage founders is they absolutely look for hustle. At least till our seed round and pre-series A round, the entire consumers whom we acquired have been through absolute hustle. And we're talking about organic growth, organic referrals. Would you believe that our first 10,000 consumers were only through WhatsApp?
Wow.
What we did was people were coming.
No paid ads at all?
Nothing. We did not do anything paid.
Amazing.
I'll tell you two things which we did, which gave us 10,000 quality people coming onto the platform. First thing is our customer success was prompt on. I was there on the calls till 3 o'clock, taking up calls, having customer feedback and all. As soon as someone's payment is done, and if there's a success point in the application that when someone wins a reward, the probability of them referring is very high. I used to call them and say that, hey, just put this as a message on your WhatsApp status. Don't put it on your Facebook, etc. Because WhatsApp status, it also gives you an option of a link. And the tap, it's very tappable.
Yeah.
And we just tried it to see. And that's how we got our first 10,000 consumers coming onto the platform.
Nice.
We were fortunate enough, within this first 10,000 consumers, a couple of them were Fintech influencers. And they saw our customer success was very good. And we had a very sweet referral program. And they told that, hey, you are doing very good. The app is cool. I see that you're very new. You don't need to pay me when I'm a budding, influencer. So I just want to sort of, be a part of your referral program. In fact, we at Koinex, we had this program called Koinex Ambassador program, where we got in a lot of people who have access to a lot of other people who they can refer to, etc., etc. And that's how a couple of influencers just were our initial consumers, and they started spreading the word for Fello. And that's how we went to our next 300,000 consumers periodically. While that was happening, we were doing so many jugado things. Like we went to every shop in HSR and we stuck our QR codes.
Right.
We spoke with the vendors.
Classic.
We went to the vendors and told ki if someone is downloading the application, ek momo de dijiye. We built a backend tool where people could see that this is how much they earn. For every installation, we were paying 5 rupees, 10 rupees. We told a story, we're early stage, help us out and all. They believe, they are also business people. They want you to grow. And they were giving, we told you, we'll pay the Momo money. Thabka CPI, your cost per installation as low as 5-10 rupees. And they were coming and investing. And that's how we got to our next 200,000. So till YC, 300,000 users, we got like that. Now you can't play this game anymore. Now you need to start scaling.
You plateaued basically on that.
That is where we brought in performance. And at least the hard truth is till your potential, next biggest stage, performance is the one which gives you the biggest visibility. You can't do your BTL ads or you can't do your telemarketing ads, which is super expensive, which gives it a lot of virality for sure. But the easiest source of acquisition for us was Facebook, Google. So that is where from 300,000 users till 1 million users, we played a lot on performance. That is the first time we started hiring our marketing team much more concretely. And right now, while we are speaking, we are completely acquiring users through performance marketing, some organic, offline, other thing. Now we have reached a point where we know that in a foreseeable future, performance and digital marketing will plateau out in terms of your cost of acquisitions. Now that is where we are starting to venture into B2B2C acquisitions. We are getting some partnerships done with several other companies who could cross-sell. We already built a dashboard to onboard mutual fund advisors, mutual fund distributors, financial advisors, so that they could cross-sell our application to their end consumers. Through this, your cost of acquisition will completely come down and your revenue starts shooting up. So that is how we, stage by stage, we are doing it. And if you want to play the VC game, or if you want to raise capital, not for building a company and not bootstrapping it, these are some of the expectations which even VCs have. Do these people know what they're actually building? Do they know how to grow, how to scale? Because if I'm going and telling that after series B or C, I'm going to just acquire consumers through performance, that's not going to work. You need to make sure that you have other go-to-market strategies. So that is where we feel that a performance will always run. And right now, let's acquire people through B2B2C acquisition channels.
Interesting. So to summarize, the first 100,000 users,
hustle WhatsApp.
Yes.
I'll tell to everyone even right now, WhatsApp ko utilize karo.
Yeah.
So much.
No, it's massive for sure, right?
Yes.
And then the next few users, you have to bring in performance marketing.
Yes.
Right. And then after that, you're looking at partnerships and so
Exactly.
on. Right?
Exactly. That's the best way to go about. And eventually, your cost of acquisitions will come down very, very low. While you're doing this thing, once you know that things are going well, you need to slightly bring in a branding play as well.
Yeah. So I was going to get to that, right?
Yes.
I mean, because you have fairly high referrals,
yes,
right? And, refer, earn, all of these, right?
Yes.
I mean, they're much abused terms,
Yes.
right? I mean, there are a lot of scammy apps.
Huge.
There's a lot of noise,
Yes.
right? How do you build the trust
Yes.
within these users,
Exactly.
right? And how do you build some sort of a brand as well,
Yes.
that, hey, Fello is
Yes.
actually legit, right? I
Exactly.
mean, it's not your, whatever
Exactly.
Chinese app or something of that sort, right? I mean,
why do consumers believe a bank? We ask these people. Like, this was another, behavioral interview which I happened to do as well. We got to know that people believe a bank way more than an application.
Yeah.
It is because they are able to see a face.
They believe the bank's application also a lot
They,
less
exactly.
Yeah.
Because
I mean, that's strange.
chehra hai, agar if my money is not getting processed, I can go to the nearest bank also, even if he or she is not responsible for the transaction.
Worst case, I can hold someone's collar, basically.
Exactly. I just don't want to use the term. Yeah. वो कर सकते हैं.
Yeah.
Because, that is the level of command what they have on their capital.
Yeah.
Now, suddenly, enter the fintech revolution and people are installing applications. चेहरा देखा नहीं है किसी का, and suddenly that person is asking to save with me. I will give you these many returns. Big no. Like you have seen some of the biggest scams in India, like you're talking about the Sahara scams, and you're seeing everywhere. Street, like in your street itself, we have heard of families telling so many scammy stories. Now, Indian consumer behavior is very, very different compared to others. Now, in order to target them, the first thing what we realized is these people know few logos. They know few financial institutions. If you have a partnership with them, throw the logos on every platform what you have. For example, as soon as a consumer onboards on Fello, we have our mutual fund distributor licenses. We show the logos. We have partnerships with Augmont. We have RBI regulated asset classes. We show all those logos where the first ground of trust is established that, okay, these people are not messing around with you.
They're legit.
They are legit. But that is only the first point of thing. The second thing what we also realized down the lane is they still want to have a human associativity in some way or other fashion. That is where people started believing, seeing founders' faces or people who are behind the application faces much more on the application or other channels as well. So that is where I started showing my face much more. I do my content and put it out on application wherever it is needed. All the product demo videos you see in the application, I am there. I am speaking over that. I take customer interview calls, and as soon as the consumer is coming onto the application, also our team gives a call to them. Through this, the human intervention, what they're expecting, we are able to solve as much as possible in a digital first format, which is solving it. Now, once the consumer invests, after that, we started doing these recent catch-ups, inviting people to office as well, so that they'll also get to know, okay, we're a good, legible or trustworthy organization. Adding on to this thing, if you're having some really good investors, talk about them. And we were fortunate enough to have some really good investors. We were just telling to the world, like, hey, like people who built, for example, Lalit, who's the CEO of Grow, is one of our investors as well. Kunal is one of our investors. So we tell it out very loudly that people who have built some of the best ecosystems are believing in us. So we are a trustworthy organization. And one of the things this is what I learned at Koinex, transparency. Even if there's a smallest glitch in your application, accept it. Don't try to defend it. Tell to the world, ki, hey, by the way, this happened. There'll be slight delay, and do it. So showing the logos, showing the founder's face, boasting of your best backers, plus being transparent. This is what fintech trust is all about. Nothing else.
Yeah, absolutely. We had Rory Sutherland on the podcast, way back when, right? And I mean, the man is obviously a genius.
Yes, exactly.
Right? He's got phenomenal insights on, human behavior, consumer psychology, etc. And I think he referenced this, right? I mean, if you take two cases where someone is happy with the product, and one case where someone had a support issue or something, but it was actually resolved.
Exactly.
The latter case, the guys got a higher NPS than otherwise.
Absolutely. I need to tell another input over here. I'll tell the typical behavior consumer pattern of our power users on there. Power users are people who invest a significant amount and they keep reinvesting. They first invest for week 1. and they withdraw immediately.
Mm.
Say they won a reward also, they want to get that reward plus money withdrawn, getting into the bank account. Then the next week, they keep investing more.
Mm.
So there was this one person from Kolkata who's one of our consumers, won't reveal the name. So he invested 500 rupees. He has won like 1 or 2 rupees in reward, that's it. And he withdrew the amount after 1 week. And then next week, he made 3 transactions of 50,000, 50,000, 50,000 just within like 1 hour span. I called him up and asked like, who are you? What are you doing? And why this behavior pattern? I guess we are also doing the same thing. Like, we just did not acknowledge it. He told that, hey, first you told that you're a new application in the market. I don't know who you guys are. So my friend told, so I put 500. For me, withdrawal is a trust factor. Is the money actually coming to my bank account or not? Along with the reward, what you're saying. As soon as I got the bank account, the reward, your customer success team called me asking for feedback. Then I realized it's actually legit. Okay, let me put more money. So that is another trust factor which people see that in fintech application withdrawal is happening promptly.
Yeah.
They feel that it is legit. That's why if you see a lot of fintech applications, they say that, they talk a lot about withdrawals. Indian consumer behavior is a lot of glued to withdrawals. I'll also talk about gaming companies. You see gaming companies, you see them instant withdrawals bolte hai. Even at Koinex, we're telling instant withdrawals. Like people believe a lot in withdrawals because they don't trust they don't trust anyone. They want to have hand-holding or ownership of their product as much as possible.
I think that's a deeper psychological thing for the Indian consumer, right? Because the first touch point with a financial institution, right, in India, I would say, right, were these nationalized banks.
Exactly.
Right?
Yes.
And I mean, I'm still old enough that I've been there, right? I've actually queued to go and talk to a teller and so on and so forth. There's a lot of sarkariness to it, right?
Yes.
I mean, we all know the famous close for lunch, come back later sort of attitude, right? So, yeah, I think that is so deeply ingrained even now.
Exactly.
Right? I mean, that trauma is still, I would say that intergenerational.
Absolutely. Absolutely. Right? But again, if you see that, right, during that process, an unknown trust was embedded into their mind also. Ki, haan bol rahe, but they're going to be there only at the end. But you told, right, when we're talking straight out of this conversation, at the least, I can just go and catch someone also. So, that is that.
So, speaking of investors,
yes.
YC must have done a great thing from a brand perspective, right?
Yes.
And I'm just curious. I mean, you can take a small deviation here to talk about the YC experience itself.
Yes.
We've had more than a few YC startups as well.
Yes.
Over the years, it's become massive, right? Huge, it's not that program where, Paul Graham and a few others are, in a dorm room sort of working with you, knitting your app together and helping you get your first 1,000 users or so, right? I mean, it's massive right now, right? Perhaps the largest incubation in the world.
Of course, the largest one while we're speaking.
Right? So, how has that YC experience been for you?
Yes.
Right? What was the 2 or 3 most valuable things you learned from that as a founder?
Get it. I'll speak out YC for sure, but also I want to touch base about EF as well, where we have grown much more, I feel as well. YC added value addition at a point of time which was super, super instrumental to us. First, I'll touch base on that. Then I'll talk about how EF also, which is one of a growing incubator right now, which added phenomenal value to us as well, right now while you were speaking as well. So we went to YC at a point of time where we were growing steadily. We had 100,000 consumers coming onto the platform. And at that point of time, the first thing what they started telling us was the key KPIs which actually matter to our business and forget about all the other things. For example, you are flying thinking that, you got 100,000 consumers. They ground you down saying that, by the way, this is a good metric, but you need to start focusing on these metrics. That's the first point of time where they started telling that retention is something which is very, very instrumental for you. You need to start focusing on your D30, D40, D90. Retention is, for example, if a person is investing on day 1 today, by end of the 3rd month, how many people are still investing and sticking onto the platform? And they gave us some of, on your induction day itself, they tell that, they ground you down saying that, okay, YC happened, we know that you are some of the best companies, but right now let's make you bigger. And they tell that start focusing on retention. One of the things what they believe in is make what people want. That is the slogan also right now. they are candid enough to tell you that your business works or not, period. They're candid enough to tell you that your co-founder relation will work or not, period. They'll candidly tell that this person, this pricing is right or not, period. They are brutally honest, and that candidness is something which YC gave us at a very good way. That is mostly on the advisory part. Second thing where YC added as a big value is trust factor went up phenomenally high for Fello.
I think the chap would have been like very valuable.
Exactly,
for sure.
Exactly. And post that YC, like almost 6-7 months down the lane after YC, we were able to raise a really good round as well. So that is how YC played a very instrumental role for us while we were there. It gives you access to an ecosystem where in the long run right now, even if you have any biggest problem, you have lot of YC community founders where you could just drop a message and they help you out. I personally feel that more than what YC gave us during those 3-4 months, what it is giving us right now, that value addition is absolutely phenomenal.
Awesome.
Like you're just talking about like we have our demo day happening, and that is a point of time like you don't imagine, like I just had a fintech background, but I did not have the background of, say Lalit, or back then, we're talking about 3-4 years ago, Gross CEO messaging and saying that, hey, found you on YC and I would want to invest with you. So that is a sort of, they're putting you on the world over there. So these are the good value additions they gave. Adding over this, being a CEO, it saves a lot of money for you. You get a lot of freebies. Even right now while we're speaking. Nice. You get tons of credits, access to workspaces, and you save a lot of money being in YC with all these freebies and free tools also. So yeah, that is a good cherry on the top.
Yeah. So what I've heard is YC almost has that academic rigor about startup building, right? Almost in terms of like a planned program.
Okay.
As such.
Oh, when you say academic rigor, are you saying that the structure is it's a structured
there's metrics and there's milestones,
yes.
And it kind of feels like, okay, you're learning how to build this thing, right?
There are 3 kind of companies / founders who come to YC. First one is absolutely early stage. Like they haven't built a company in the past. They're 2 founders, amazing, phenomenal folks, energetic, potential of building a company. That is one criteria.
It's like a napkin plan, basically.
Exactly. The second one is people who are much more seasoned, but they're building for the first time. Like someone who are like ex-start founding team members, that sort of people. And third category of people are people who already raised capital. Their business is growing. They also come to YC for several different reasons. We belong to the third like a mix of second and third category. By the time we went to YC, we already had a term sheet and we're in a decent shape back then. So since 80% of the people who come into YC are the first category, they have a very structured program. First few weeks of induction. They come right, even in the induction, they don't bullshit. They tell you, like, this is a thing, this is a business. If you're a B2B company, this is this. If you're a B2C company, this is this. Let's start working towards it. They give you a mentor for you. For us, for example, we are a B2C company and we got Gustav, who was the head of marketing of Airbnb, as one of our mentors back then. And Aaron, who was another B2C pro, he was one of our mentors as well. So they assign such sort of mentors. You have catch-ups every week. They also bring in a lot of other founders. For example, Airbnb founders were giving us inductions, and Razorpay founders were talking with us, telling what it goes from 0 to 1, 0 to 1. It is structured for a reason, because majority of the people who are coming are first-time savers. I'm saying Fello ka lingo use ho gaya. First-time founders. So that is why it is very structured, but it is working for them. Like you're talking about, they being one of the largest incubators for a reason, that they got that program sorted. So yeah, that is that.
Awesome. So what do you have coming up in the next 18 months? Because I think at every leg of the journey, the founder has to sort of reinvent themselves.
Yes.
Right, for the next phase.
Oh, absolutely.
There are things that, new things that you might add to your arsenal.
Yes.
Right, people that you need to hire to take care of a few things.
Absolutely.
So on and so forth. Right?
Yes.
So what is that next phase looking like for you?
I guess after a point of time, it is not just professional for you anymore. It is a very fine balance of professional and personal. The reason why I say is like till, like I still even remember till the pre-series A round, eating every random shit possible just for survival and running the business, no sleep, no nothing.
Yeah.
Just numbers.
Taking calls till 3 a.m.
Exactly. And you feel that, you're like ruling the world. But after a point of time, you crash. You feel that, oh, this is not what happens. That is where I started getting into healthy lifestyle, and I realized that this is something which I need to maintain very good, and this need to come over here. While this is happening, you need to make sure that one of the things which you need to accept as a founder is you can't do everything by yourself, period. Until unless you accept it, you're going to be screwed for sure. So 2-3 months I was just doing everything. That is where I realized, okay, it's not going to happen. What all tasks I was having which takes 30% of my bandwidth, I started outsourcing it. So that's the same thing what I do even right now as well. So even right now, since we are gearing up for our North Star goals, while the business is scaling, I'm making sure to put in healthy practices, not just to myself, but even within the company, so that it is going on a very stable note. Because I know that post your next round of funding, once you start going towards your next biggest goals, when you're trying to, Fello is only one product right now. We are building complementing products to Fello. When you start handling 3-4 products, it requires another level of mental energy. When you're trying to get into that energy, you need to have very good relationships with your team. So right now my time completely goes into deeper relationship building with my team members. Secondly, setting up healthy practices right now, so that after a point of time when there's an unknown wall which comes up, though you're not separated from the team, but again, your day-to-day interaction with the granular team members reduces down. How to have those communications prompted, that is what it's happening on a personal level. But on professional level, what we're working on Fello right now is, Fello is going well. Things are scaling up good. We want to have a total, we have North Star goals of having nearly over 2.5 million users in the coming 4 to 5 months. Right now we're at 1.25. We want to double this. We did not spend anything into market in spite of raising capital. So that is where we're heading to. But while this is happening, we saw 2 opportunities coming up. One is the NRI segment.
Right.
Koinex gave me the opportunity of working on multiple products. So we know how to play the game of scaling one product and working on other products. That is what we're building. Secondly, as a part of a go-to-market strategy, we're also building some tools for mutual fund advisors. So scaling Fello, building these complementing products to increase our addressable target market. That is what we're doing. But of course, trying to acquire consumers at a cheaper cost. That is that. Hiring, no. One of the things what I believe a lot is don't overhire, to be honest. Like, the reason why I say don't overhire is, first, why to, have a leakage of capital. Try to test the optimum of your team members by having 1 or 2 buffers. That's what I believe in. I feel that best example for me is Stripe. Stripe just had 50 team members and they had like millions of dollars ARRs coming up back then. And right now Stripe is one of the biggest payment gateway companies. They were able to do it just with 50 team members. For example, the other day I was speaking with one of our VC. Fello has a replica in US called Long Game. And they got sold to a bank called Trieste Bank with just 10 team members.
Wow.
And this team, he was asking, why do you have 25 team members? I was like, we're talking about 2 different demographics. We're talking about, Indians just calling you for customer issues. So it's a very different thing. So that is why I don't overhire. I'm not focusing a lot on growing the team. It's just about scaling the numbers and building more products. So that is that.
I think a good team and a great culture can go far longer than people generally like sort of expect. Right? I mean, that's something I've seen like constantly sort of surprise me as to how far my team can extend themselves. Like both in terms of depth and width, right?
Exactly.
Like person A who has been, let's say, doing performance for a while. He can manage, some other thing, outbound, for example.
I guess.
Or someone who has just been working on a particular geography can pick up something else.
Absolutely.
Right? And go deep as well. I mean, it's just phenomenal. It's and the conventional thinking sometimes is to say that, and especially when you have money and when you're kind of in that scaling mode, is to be like, hey, let me just get, this guy is doing whatever he's doing, let him do that. And let me just get someone else to pick something else up. But the problem, what happens is, that guy who's doing well on something, he's going to get bored soon.
True that.
Right?
True that.
And obviously, I mean, he needs to, or she needs to expand their responsibilities also.
Exactly.
Right? And what makes you think that someone else who's done something of that sort elsewhere will start being immediately productive here?
Couldn't agree with you more.
Your best bet to solve this other, additional ancillary problem is to actually use someone in the team.
Exactly. Like, the most beautiful thing of an early stage startup is you can literally do everything.
Yeah.
Founding team will never say no. Say a customer success team member is coming in saying that I have bandwidth, I want to go into marketing. No one will say no. If someone is saying no, they're not an efficient, managers or leaders.
I think that's the core element of being a startup.
Exactly.
I mean, I kind of wrote about this sometime back that in the early days, it felt like everybody was doing everything, right?
Yeah.
I mean, I remember our operations guy writing some fancy macros.
Is it?
Right? I remember our VP of engineering, right, fronting a new business initiative.
Get it.
Everyone, it seemed like, they had a couple of hands or legs. I mean, they were all very diverse, right? I mean, they were all doing things that you couldn't just classify as, okay, this guy's a sales guy, this guy's a product guy, or this guy's something else, right? Everyone was sort of a hybrid mixture. And that is something that I miss these days, in the sense that we have become so sophisticated, so mature as an ecosystem that I think roles have become very siloed.
I feel that the best startups, let them be like, doing good or bad, but some of the best startups which have a really good product. What I've seen in the team members is every team member is a product manager. What I mean by that is like they have empathy towards product, they have problem solving skills towards the product. Let them be in any different silo also. And this is something the reason why I take the example of Stripe a lot more is I love the philosophy of what Stripe had. What Stripe used to do is, for example, we are trying to build a new product. They only had majorly engineers. They don't have PM till their first 50 product managers. What they used to do is, feature has been...
So we've dissed PMs like horribly on this podcast before, okay? So this is nothing new.
I'll tell you what they used to do. They used to come and say that, okay, who is going to PM it? That is the terminology. What do you mean? Who is going to PM it? Who is going to be the product manager of it? They don't have PM, so they were like, someone needs to PM it. And that is how engineers became efficient product managers, and engineers started speaking with consumers much more detailedly so that they don't hear out to someone else while building. So that is how they have some of the best product management expertise or product managing practices. So even right now when I hire an engineer, in the final conversation which I have, it is towards product management skills. Like how much empathy do you have towards product?
So, I hate to sound like an old fogey, right? I mean, but 15 years back, a product guy was basically an engineer who had more than average social skills and more than average ability to articulate and verbalize things. That's it.
Yes, right? Exactly. But right now, things have changed, ecosystem has changed, but I guess unknowingly I'm trying to stick back to the root basics.
I think that core ethos has to sustain, right? I mean, I think startup building is that.
Exactly.
I would say, right? So there's plenty of great things that have happened. I feel like, like 10 or 15 years back, we didn't have a precedence. We didn't have those frameworks, principles, and so on and so forth, right? That obviously we can leverage now, right? I mean, you don't have to stumble and fall across every damn thing that you do.
Exactly.
Right? That's not core to your business. And rather, you can leverage some of this knowledge that we have, right? But I think it has to be like a fair balance.
Undoubtedly, I guess
fair balance between like the pirates and the, whatever you call that.
Exactly. I guess every early team member, there'll be a saturation to what they do. Cross-functionality is the key, and there's no more better avenue than a startup to, pick up those skills as well.
Yep. Hey, so this has been a fascinating conversation.
Likewise, man.
Really,
I
think there are probably like 20 other rabbit holes we could get into that I'm kind of avoiding for lack of time.
I remember your email where you mentioned, we can also get into a few potential rabbit holes.
Hey, we really mean that. Yeah. But, before we end the podcast, what are some books or podcasts, other podcasts that you would sort of recommend?
Oh, okay. So I'll tell you,
it goes without saying that the startup operator is recommended, but
of course. So, I'm a very different person in personal life. There was a point of time I was completely into productivity. Let me have these productivity books, podcasts, everything. Right now, I have very fine. I told you, right? What am I focusing on right now? I'm focusing on my personal well-being because it's very instrumental for my next phase of, professional challenges as well. So I break it down into two sections of what I consume on a day-to-day basis. First thing is something which will help me out on a day-to-day. Second thing on my personal level. So on a day-to-day thing, the first book which I actually read while building a company was The Hard Thing about Hard Things. Andrew
Most
Horowitz.
recommended book on the podcast so far.
The reason why I'll tell you also, he tells about his richest story, how he fucking sank, and then he came back acquiring and then building the largest VC. Like, it gave a reality check ki it is not, something hairy-dory. Second thing is Almanac of Naval Ravikant. Period. Absolute period. Like, good balance of wealth and happiness. That is the second thing. I just, this was on my hit list for a long period. Everyone knows it, but I just completed it 2 weeks ago, which was Ikigai. By Hector Garcia. The reason is, again, as I told you, I'm trying to get into a healthy lifestyle. It is helping me. Right now, period. If whoever is listening to it, sleep for 8 hours. It's magic. It is absolute magic for sleeping 8 hours. My productivity actually went up. I'm not kidding about it. And previously, I was like 4 hours. Let me just sleep from like 4 to 8, wake up 8, get to hustle.
Right.
12 o'clock, 1 o'clock.
As someone who regularly sleeps for 5 to 6 hours, I can tell you, I mean, my weekend, my Sunday naps are therapeutic, right? I feel like a new man if I wake up after 8 hours, right? Or even the 2 hours in the afternoon. I mean, it's amazing.
I started feeling that very evident change that even if I go to work with 6 hours of sleep versus 8 hours of sleep, that number of tasks, what I'm doing when I'm sleeping for 8 hours versus like even shorter, phenomenal difference. And I became very much productive after this. So these are one final book I have to tell you. The best book what I read in recent times, Make Your Bed. Have you read this thing?
No, I haven't.
Make Your Bed is actually a speech by this person called William, Admiral William, I just forgot his last name. I'll be able to...
I think, you know what? Is this a guy who gave the
speech at University of Texas?
I've seen that. And something he said stuck with me ever, right? Like even now, as you said that, which is that no matter how shitty your day has been, when you come back to bed, at least it's made.
Exactly.
Right?
That's the same
thing. And the first thing you wake up, and you do this, you've completed one task. Even before you like move out of your room, you've completed one task.
You completed the rest of the narrative. That's the what I was trying to say. I'm not even making this right now. The first thing what I try to do is, before I leave, I see my room, is the bed made or not? Because the first thing I'm crashing on after having a heavy day. It's a very small book. I don't know if it has one chapter and 9 more other chapters. He gives example of his life in the army and how he replicates it to others. Amazing thing. And podcasts, I am here listening to a lot of All-In, loving it. I love it. Just 4 billionaires talking about every random thing across the globe.
I was just listening to it today.
So, I loved it. I loved All-In. Second thing is, I started getting a bit into mythology. I listened to a lot of the Devdutt Patnaik show. I told, right, of the thing I'm trying to, you need to have balance with your other things also. If you just have work productivity, it just gets saturated. I'm big time mystery and horror buff. I listen to a lot of this podcast called, once again, what is his name? Bhaskar Bose podcast. Bhaskar Bose is it's a mystery podcast on Spotify. Absolute fun.
I'm going to check it out.
One final thing which I highly recommend to everyone is think smart and talk fast. Think slowly.
We had Matt Abrams on the podcast.
Is it?
Yeah.
Oh my God.
2 podcasts back.
Oh man. Those were days.
He's amazing.
Those are days when I was trying to boost up my productivity. Pre-series conversation. Chalo, I need to sort of...
We should cut this clip and send it to Matt.
Oh yes. I'm not even kidding. Even right now, if you see one of the first four podcasts that will be there. Oh, love it. Oh, would love to sort of, meet him one fine day. I love it. I just love his things. But these are the things which I consume. A good mix of fun, but at the same time productivity.
Awesome. Yes. Awesome. Man, this has been a fantastic conversation.
Likewise, man, I totally loved it.
I really enjoy your passion and how mature you are as well, right? I mean,
much humble to hear that.
It kind of shows. I mean, you have a very integrated personality.
Thanks a lot for that.
And wish you all the best for everything.
Thanks a lot. And wishing you all the best for your podcast. Keep scaling. Next time, if you have such amazing folks coming up, just knock me up and say, any of the names what I told today is coming up. Just message me. I'll be there outside trying to meet them as well.
Cool.
But
see you, man. Thanks so
much
much again.
Have a good day.
Yes. Yeah. All the best.
See you soon as well.
Yeah.
Yep.
All right, folks. Why did I say see you soon, actually?
Can we cut it?
Yeah, okay. Cut that. All right, I'm just going to do the awkward handshake again.
Yeah.
All right, thanks so much for being on the podcast.
Thanks a lot for inviting me as
Manish,
well. Great
and,
speaking with you.
Yeah, fantastic.
Yes.
So, all the very best. All right, folks, that's it for this episode of the Startup Operator podcast. If you enjoyed the content, don't forget to like, share, subscribe, do all of the fantastic stuff. And yeah, I'll see you soon on another podcast. On another episode, sorry, Sean. This is my least favorite thing. Okay, all right, I'll see you soon on another episode.